What I wanted to talk to you today is a topic quite controversial when it comes to investing and trading in the stock market. And what it is short selling. Now, we're all used to the traditional way of trading, which is to buy low and sell high. Short selling is the same thing basically, to where you first sell high and then you buy low. It's that you sell a stock that you don't own at a higher price, and then you replace it with the same stock that you went and bought at a lower price. Now, I know that this can be very polarizing, but I want to say that a lot of fortunes were made by short selling. Like there is a very famous investor, Michael Burry, that made his fortune by short selling. George Soros made a lot of money by short selling the British pound. So why short selling? Now, I've been very successful, I would say, many years investing and trading the conventional way, like the Warren Buffett's way, which is to find companies, their good performance, and then wait that the price hits a threshold and buy them, and then sell them at a right moment in time for a profit. But now, since have been short selling stocks, my portfolio has skyrocketed. Well, like we all know, the stock market goes in cycles. And where are we now in the cycle? Well, you got the S&P 500, which is pretty much close to the all-time high. And it's been trading flat today. I believe that the S&P 500 definitely it will go up like it always does, but it's not gonna double, triple, quadruple in the next month or 2 months. Okay, so the big money is made by short selling. The other thing too is that there are only a few companies, I believe 7 companies in the S&P 500 that they are responsible for the bulk of the gain. And we all know who those companies are: Apple, Microsoft, Nvidia, Meta, Amazon. But you're looking at 7 companies out of more than 10,000 that are publicly traded, making all those gains. And what about all those others? Like I say, there are about 10,000 companies trading every day or more. So, like you see, there is a better opportunity to short selling a stock. If you were to buy one of those big companies like Apple, Microsoft, Nvidia, Amazon, really they are trading at a high PE ratio, price to cash flow ratio, and it's not going to go forever. You know, sooner or later, the music is going to stop. And what happens when it does stop? Now it's your time to start short selling a stock. Like I say, my performance have improved when I started short selling. I think luck is always a factor. Definitely, short selling requires more time or more attention. You'll have to look at it every day, or if not every hour, because most of those stocks they're volatile. Now, if you have a 9 to 5 job and you want to buy a good company, or you want to buy the S&P 500 and you want to forget about it, you can do that. That's not short selling. Short selling requires that you look at it, like I say, with consistency because of the price fluctuation. Uh, I definitely believe that there are better opportunities. There is more upside for where we are right now in the market, short selling stocks. And why do I say that? Like I was saying, the bulk of the S&P 500 hasn't really gained a lot. It's kind of trading flat. If it wasn't for those big companies, they're doing all the gains. One of them, of course, is Nvidia that we all know. But Nvidia is trading a what PE? Now I don't know. You might look it up. It could be 50, 60 PE, and it's unsustainable. It's not gonna go up forever. Like it's been said on Wall Street, bulls make money, bears make money, and pigs get slaughtered. So who are you in these categories? I believe that it's easier to find a stock and predict that it'll go down instead of up. And you can really make a lot of money by doing this quickly. Like it's been said, another saying that it's been said on Wall Street is that the stock market takes the stairs up and the elevator down. So if you can come up with a good strategy, you can really make a lot of money in a day or a few days and a week time that you would make by buying and holding and keeping your finger crossed that that stock will go up. Now, I like to think of the stock market and each individual stock like a life form. Okay, we might compare like each individual stock. We might compare it to an individual, a human being. Now, of course, we all know that what will be our end sooner or later. And I look at it the same way. an individual stock is not going to go forever. It doesn't matter what company, it doesn't matter how good they perform, it doesn't matter what the earnings are, all of those things, sooner or later, everything comes to an end. Nothing is forever. And if you don't think so, you're living an illusion. Okay, if you think that Nvidia is always going to go up or Apple is always going to go up, I got news for you because I have study history of the stock market, and that's available everywhere. That the Nifty 50, those are the top performing companies 20, 30, 40 years ago. And where are they now? Where is BlackBerry? Where is Polaroid? Where is Kodak? Long-term capital management. Where are those companies now? Enron. Those were the top of the notch companies, like we have Apple, Microsoft, Nvidia, Amazon, Meta today. Okay. So in the same way, in history, we've had many successful people. We've had Genghis Khan, we've had Napoleon, we've had many emperors and kings in history. And where are they now? No, where are they? So it doesn't matter how good a person is, how successful a person is, sooner or later, his time will come. And I like to have this idea in my mind to look at each stock like a person. Then I look at a sector ETF like human race. Now, of course, I can make a good assumption here that human race will outlast every individual human being. Think about it. Now, I might say that 100 years from now, none of us here listening, none of us will be here. But will human race be here? Yes. So I like to think at it this way. And I like to think of life on planet Earth like if it was the broad market ETF. Will there be life on this planet many years from now? It's a good assumption to say yes. Now, I don't know if it's going to look in this form, but there would be some type of evolution, some type of life. The same way I look at a stock, when I go and look for stocks to buy and hold, really, I know that this is going to be a limited time because sooner or later it will drop. Everything that goes up it will go down. Okay. And of course, I've been studying the stock market. I use stock screeners and all that to come up with a good stock to buy according to the traditional way. Okay. Good fundamental, good ROI, return on equity, return on tangible equity, net profit, low debt, all of this. And really, I couldn't come up with anything. And if I do, they already trading at a way overvalued valuation. And we're now at this point in the market where it's not easy to find those opportunities. And again, if I look at it from this analogy of the human race, let's say that we go out and we see a lot of people. We go out on the street, we go to a market or anywhere, and we see a lot of people of all ages, a 40-year-old, a 50-year-old, a 60-year-old, a 70-year-old, a 90-year-old. We see people that are very, very healthy, people who have diseases, people who are ill. I guess my question now is it easier to find out a person and estimate how long is it going to live, or is it easier to find a sickly person or an ill person and estimate when is it going to die? For me, the latter. If there is someone that already has a terminal disease, someone is very sick, okay? If someone has a condition, or if the doctor already told them that they have 6 months of life, it's much easier to estimate how long they have of life on this planet. Now, I don't mean to be drastic, but I like to think of the same thing about the stock market. Because in the same way that we go out of the house and we see a whole bunch of people, all ages, all levels of wealth, health, in the same way I can go on a stock screener and I'm going to realize immediately those companies that have diseases, those companies that are ill, those companies that they have a terminal sentence. And you can do it too. Now, there are many stock screeners, but for me, uh, like if a company is a mediocre company, let's say that they have a 5% net income, they have a 1-2% return on investment, they have some cash in the bank, but they also have a lot of debt, a lot of liabilities. A mediocre company, like the majority that's been traded. A mediocre company that is trading a 40, 50 PE, 30, 40 price to cash flow, it's overpriced. I think I'll be pretty accurate if I'm going to short that company. Now, I don't know how long it's going to take, but I already know that sooner or later that company will drop. Now, the other thing that I look for are companies who pay a high dividend. There are companies that pay 6, 7, 8, 9% and more, 10, 11, 13, 14% annual yield. And they have a payout ratio of 80, 90, 100. There are companies who have a payout ratio of 120, 150. That means that that company, they need to go and borrow money in order to meet that obligation of pay the dividend. Now, a company like that, it's a ticking bomb. And there are plenty companies like that. Can be in the real estate space, in the mortgage space, pharma, gas, energy companies. You can look it up for yourself on the stock screeners. For me, a company that has lower revenue every year and it's got negative EPS and it's got a 7, 8, 9% dividend yield with a high payout ratio, it's a no-brainer. It's a no-brainer to go and short that company because it's a ticking bomb. Now, it's much easier to find those companies that come up with the next Tesla or the next Nvidia. You see where I'm going with this. I've been investing, like I say, the traditional way for over 20 years, but I'm at the point that I want to look at other things. And I think short selling is the way to go now. Now, it's not going to be always the way to go. I'm just saying, right now, we have the market at the whole time high. We got 7 companies driving the whole market. Really, if I was to buy the S&P 500 today, it's not going to double on Monday. Yeah, it might go up a split. You're not going to make a difference like that. Now, the other type of companies that I look for are companies in the retail space that pretty much lose money because of inflation. Pretty much everything now is going up. The cost of the rent, the cost of the raw materials, all of that is going up. Manufacturing companies. And what happens if they are not able to pass along those costs to their final buyer? What is going to happen to those companies? They're going to basically make less money. All of that is going to go straight to their bottom line. So I think the opportunity of short selling, it's huge right now. And I know that this topic is taboo. There are no many videos on this. There is no much literature because people are afraid. People are afraid that they're gonna then lose a lot of money. But you can lose a lot of money by buying a stock too. Not only short selling. And I think right now there are more opportunities short selling a stock than buying it outright. And if you think about it, to buy a stock, you gotta use your own money. Like I want to buy 2 shares of Apple. I don't know. Apple is possibly trading about 220. I gotta come up with $440, something like that. Don't quote me on this. But if I want to short sell Apple, it's none of my money. It's really none of my money. Have you thought about it like that? And if Apple drops, there you go. You made a profit with infinite return, not using any of your money. I think that's a pretty good strategy. Now, of course, there are companies out there that are heavily shorted, and you can look it up on the internet. Most heavily shorted stocks 2024, and you come up with a whole bunch of companies. And it would be best if you stay away from those companies. They are heavily shorted. Because then you might find yourself in the same situation as the GameStop investors or the AMC investors that they had to go back out there because of the short squeeze and buy the same security for 20, 30, 40, 50 times the price. I would not buy anything which is a brand name, even if the company is bad. I would just buy whatever is unpopular, or rather short sell whatever that is unpopular. Do your homework. Like I say, there are a ton of stock screeners out there. Come up with your criteria, and you will realize that it's much easier come up with the company that is not gonna be around 2, 3, 4 years from now, then come up with a company that is gonna double, triple, quadruple next year. Okay, I'm gonna leave you with this and stay tuned because there is more to come.